I was pondering on the purposes of this event in terms of being our economic breakfast, an opportunity to have a little bit of an economic outlook. I often ponder on why we get together. I know connectivity is important, I appreciate that, but I do like to think about, well, how does this kind of event or webinar or bringing us all together, how does it actually add any value to our time? And I think it does. I think it does in three ways. Firstly, I think it's really, really important that we feed back to all of you guys about quarterly economic survey, because I know many, many of you actually input to QES. You take that 5 or 10 minutes to input into QES and give us the all important intel that we need. Secondly, I cannot stress how important QES, Quarterly Economic Survey, is to us in terms of our influencing work, our lobbying work on your behalf as our members. So Quarterly Economic Survey, the data, the intel, which is gathered across the whole of the country, across all of the chambers of commerce. It's one of the longest standing economic surveys in the country, which is fabulous. And we take all of that intel and all of that data, and then we use it to lobby, we use it to influence. So it goes into the Bank of England, and more so at the moment, of course, it goes into government, into trying to influence their policy decisions and their outlooks in terms of hopefully supporting business. So I did want to stress how important QES is to us, and thank everybody who I know takes just the 5 or 10 minutes to fill in QES and send that data in to us. And then I was thinking, well, how does it add value to me as a leader, to you as a leader of businesses? And I think it helps us think about the future of our businesses, because what we should be doing is we should be taking economic data, we should be thinking about the economy in terms of its future prospects, immediate and more long term. And then we should be using that to shape our own thinking and to shape our own leadership within our businesses. Sorry, I've got a bit of kickback there. Okay, shape our own leadership within our own businesses. And I can promise, and I'm sure you've seen them as well, particularly our colleagues and our friends on the call today from professional, financial and the services sector. I can promise you so many businesses have been in some ways changing the nature of their business because of the economy, because of the reflection of what's happening in the economy at the moment, and of course into the immediate future. So we've seen loads and loads of customers, of businesses thinking about reshoring their supplies over the last 12 months. That's been interesting. We've certainly seen more businesses than ever thinking about how we all have to diversify our revenue streams, our income streams, so that we're far more resilient. Even if we were resilient, we're far more resilient than we were before as we move into the future. And then we are seeing, which is fabulous, but we are seeing more businesses increase their export markets. Now, that's not to say that we're seeing enough businesses being new to export. And if you don't think about export, I would encourage you to do so. Even if you're in professional financial services sector, did you know that is one of the fastest growing export sectors at the moment? And I was looking at something last night from our Department of International Trade. They're putting on a webinar about export opportunities in France for those within the professional, financial and services sector. So if you are new to export, I'd encourage you to think about it. But we are certainly seeing some existing exporters across our patch having some real successes actually in terms of increasing their export markets. So we have an hour, we have a couple of really good inputs coming along in a moment from Sunny from Warwickshire County Council and from Steve, Prime Accountants, our sponsor of QES. But if it's okay with everybody, without you all thinking, oh, she does waffle on a bit, if it's okay with everybody, I wanted to reflect on the wider economy. And that's because on your behalf, I sit on a group called the Economic Impact Group that is chaired by Andy Street, the elected mayor. And we meet every Thursday, and we've been doing it right from the beginning of the pandemic. And we pull in all of the economic data that we've got. I think Roger sits on it as well from Lloyd's. There's lots of us who dip in and out of our economic impact group, and we take the data that we've got, and then again we use it to influence how we reset and we recharge the wider West Midlands economy. And then, of course, for me, how I bring that into Coventry and Warwickshire. So very quickly, here's a little bit of the outlook. I'm glad we're not in a room you can't throw your breakfast buns at me, because it doesn't make pretty reading, I have to say. So the West Midlands, well, we've seen the largest contraction of all regions in the UK economy, registering a decline in GDP of about 24% at our worst quarter last year. And as UK as a whole, I think we're at about 21%. So, so we know things are tough, but equally, because I'm always an optimist, we know that Warwickshire tends to be the leading edge of the West Midlands economy. We know that if we're going to struggle, we're going to struggle more in areas such as the Black Country, she says, as a Black Country girl. Youth claimant, so this is a reflection of unemployment. Youth claimant is now sitting at about 8.6%, really, really scary times. I think we all know the reasons for that, because of the hardest hit sector, which of course is hospitality et al. 42,000 now young people are making claims to universal credit. So we all need to do as much as we can to help our young people secure skill opportunities and job opportunities. And so a little bit of good news, although we saw a real big drop in apprenticeships early last year by about 40-50% across the economy, the wider UK economy, I'm really pleased to say that certainly in Warwickshire, around December time, we started to see an improvement in the apprenticeship uptake. We've also seen a brilliant uptake or interesting Kickstarter, which I know many of you will know about, albeit we are waiting for a placement to actually happen. But across the country, and certainly across chambers of commerce, we've got 12,000 Kickstart placements that are waiting to happen once we can get DWP to hurry along and start to put our young people into those placements. And thank you to all of you who've stepped forward and said, yes, we'd be interested in providing a placement. Redundancies, we've got something like 70% of firms that are expecting or reporting they may make redundancies in the next 3 months. That's across the UK and indeed across the West Midlands. Be interesting to hear what Sunny says about Warwickshire. Something like £300 million has been claimed so far from self-employment income scheme. Brilliant that the support has been there for our businesses, our self-employed, but that gives you the huge amount of money, of taxpayers' money, that is having to be claimed down by the government. I know we've got some banking colleagues on the call today, so I'd be really interested at some point to hear where we are in terms of the uptake of because I know it's still happening, the uptake of our business interruption loans and our bounce back loans, and then the new resurgence of the bounce back loans. 76% of firms now report that we have some of our staff working from home. Yeah, I think we all get that. But interestingly, of that, at least 10% of our firms are reporting significant increases in productivity. So that tells us something about our futures in terms of the way we might want to shape our businesses, if we can, shape our businesses in terms of blended working from home with working in and out of offices. I accept that that's not always as easy if you're in retail, manufacturing, engineering, and so forth. And then Brexit, the dreaded Brexit. I know we're being joined today by David Burton. David actually chairs and has chaired for a long time now, a few years, chairs the only business-led Brexit group across Coventry and Warwickshire that has not only been taking, again, the intel around EU transition and the potential disruptions, as well as the potential opportunities, but again, we've been using that to feed into government. And when it comes to the end of EU transition, which has now happened, the kind of things that you guys are reporting, that businesses are reporting across the country, across the region, is that yes, we've got disruption. We know that. Things like new rules of origin, conformity, product markings, all causing complexities and again, bureaucracy, disruption amongst business. some of that, I promise, I think will be teething problems. Some won't be. The additional cost is a little bit more scary when it comes to the end of EU transition. And that's because the cost of freight has gone up. Or if you're using a freight organisation, they've hiked their prices up. Forgive me if we've got any freight organisations on the call today. Be interested to hear from you. Port stacking. Yes, we know that's going on. We can see that on our TVs. We're getting humongous amounts of inquiries and queries coming from businesses who are trying to trade in and out of Europe, import and export. And I know we've got Kim on our call today. Kim is the customs specialist that operates out the chamber across Coventry and Warwickshire. Hello, Kim. And then we have some early indications that EU firms, so companies in the EU, are now starting to cancel their orders with UK firms, and that's because of the very disruptions that we're experiencing here in the UK. And again, it'll be interesting to hear from some of you as to whether you're experiencing that, particularly any of our manufacturers on the call today. So I might come to you, Tom, President of the Chamber, but also engineer background in manufacturing and engineering. So yeah, that feels a bit bleak, doesn't it? It looks bleak. Hopefully we're starting to see the light at the end of the tunnel with the vaccination programme. Well done thus far to Nadeem Zahawi, our very own Member of Parliament out in Stratford-upon-Avon, and all of the work he's done to lead that vaccination programme. A little bit of a light at the end of the tunnel, but probably 2-3 years of a need for recovery across our economy. So there we go. So Sunny, how does that look and how does that pan out in terms of Coventry and Warwickshire? What's QES telling us for Warwickshire businesses? Where is he, Sunny?
Hi, thank you, Louise. I think Sean's going to throw up some slides. Brilliant. Yeah, thank you, Louise. Good morning, everyone. My name is Sunny. I work as an economist at Warwickshire County Council. This morning, I wanted to give an overview of the latest quarterly economic survey results for Q4 and give a brief look at how the index has fared over the course of the past few years and in particular across 2020. I wanted to briefly cover how the overall economic outlook for both the local services and manufacturing sectors has changed in Q4 alongside looking at the domestic and overseas orders index, the employment index, the cash flow and investment index, and also the business confidence index. Next slide, please. Thank you. So before going ahead, it is important to bear in mind that the index score that makes up the QES is similar to those used by the Purchasing Managers Index. And an index value of 50 is balanced, and anything below 50 suggests most respondents feel pessimistic or negative, and anything above 50 suggests that most respondents are feeling positive or optimistic. Next slide. Brilliant, thank you. So looking at the overall economic outlook shows a positive move for businesses in Q4, with an index value pushing above that 50 mark to 51.5, suggesting that businesses across Coventry and Warwickshire were feeling signs of optimism in the last quarter of 2020. This is the first quarter since the beginning of the pandemic that the index surpassed that important 50 mark. And this comes despite Q4 posing another unique economic landscape for businesses, where the regional tiered system evolved into the national lockdown at the beginning of November, with non-essential businesses being forced to once again close. There was also an extension to the furlough scheme announced. And issues surrounding the EU transition came to the forefront once again, as Louise mentioned, as the deadline approached. Despite kind of uncertain national economic outlook, the rollout of the vaccine in early December time provided a sense of clarity and optimism for businesses within the sub-region. Next slide, please. Okay, so the index for domestic orders in Q4 showed a considerable increase for both the services and manufacturing sectors, with the service sector increasing to 40.4 in Q4. Both current and advanced orders did increase, but remained below that 50 mark once again. Nearly all of the service sector businesses reported a decrease in current and advanced orders. This is likely to have come as a result of working below full capacity and also lower levels of consumer demand in Q4. On the other hand, the domestic orders for manufacturing actually surged significantly to 73.4. This was a significant jump due to substantial increases seen in both current and advance orders, as we can see on the slide. This is likely to have come as a result of manufacturing businesses engaging in perhaps stockpiling in advance of that EU transition deadline. Next slide, please. Brilliant. So the overseas index for the local services and manufacturing sectors has seen a rise in Q4 relative to the lows experienced in Q3. Overseas orders for the service sector increased to 47.1 in Q4, with most businesses stating that both current and advance orders had remained constant. Similarly, the manufacturing sector also saw kind of a similar increase in overseas orders to 48.3, once again with most businesses stating that both current and advance orders remained fairly constant. I suppose despite kind of seeing these slight increases in the index score, once again, it ultimately remains below that 50 mark, showing slight pessimism amongst local exporters in Coventry and Warwickshire. And I suppose despite this stabilization in overseas orders, as we can see from the businesses, is important in times of economic shock. So I suppose that's a positive look in terms of the overseas orders index. Next slide, please. Thank you. The overall employment index is made up of how labour force has changed in the past 3 months, alongside how businesses expect it to change in the coming 3 months. So there's been a positive move in both sectors, particularly in terms of the coming 3 months. And this is likely to have come as a result of the Chancellor announcing an extension in the furlough scheme in Q4, as I mentioned earlier, allowing businesses to retain their existing workforces for the coming 3 months. This is shown in both sectors as both sectors' employment index pushed past that 50 threshold. The manufacturing sector in particular saw a significant rise within the index, and this is likely to have come as a result of a surge in that business activity resulting from stockpiling, once again ahead of that EU transition at the end of the year. Next slide, please. Thank you. So this is the cash flow and investment index, and it had increased for both sectors in Q4, but still, once again, as I mentioned, remains below that 50 threshold mark. The local services saw a 10-point increase to 45.4, with the increase in the cash flow component carrying the overall increase. This comes as 2/3 of service businesses reporting a cash flow improvement or remaining the same in Q4. So 2/3 of businesses actually mentioned that cash flow improved or remained the same in Q4. And the manufacturing index actually dropped by 4.3 points to 41.3, mostly as a result of a decrease in investment levels, with only one business reporting an increase in investment in Q4. However, the drop was offset by an increase in the cash flow component to 56.3, which is again likely due to that heightened business activity in Q4. Next slide, please, Sean. Thank you. So business confidence. So the bounce back seen in Q3 in business confidence increased further in Q4. Business confidence in the service sector increased to 67.9, way above that 50 mark, with the vast majority of businesses reporting an increased turnover and profitability this quarter. Despite this, 73% of businesses still reported working below full capacity, once again likely due to adhering to government guidelines in terms of the national lockdown that was set in Q4. In terms of the manufacturing sector, this also saw a surge in confidence to 71 for Q4 as a result of that increase in turnover, which is the component that makes up the business confidence. Same as the service sector, 75% of local manufacturers did report working below that full capacity level. And further to this, all businesses that did complete the survey expect price pressures to increase in the coming 3 months, with 75% of them expecting this increase in price coming from raw material price increases as a result of, likely as a result of the EU transition. Next slide, please. So this graph shows how the local manufacturing service indexes have changed in comparison to their national counterparts between 2016 and 2020. we can see that the local manufacturing index, so the orange squares, and the local service index, which is the blue squares, have considerably bucked the national trend up until the point of the first national lockdown. The impact of the first national lockdown was significant on local businesses, with both sectors seeing a significant downturn in the index scores, but it wasn't as bad as the national trend in both sectors. So once the economy kind of opened up slightly in Q3, we saw an uptick, but as we can see that the national uptick was slightly higher. And then look, latest figures as of Q4 kind of show the data in both sectors having a bounce back above that 50 mark, and are also in line with the national trend, but still slightly below the pre-COVID levels. Next slide, Sean. Brilliant. So in summary, the results from this quarter's QES show continued signs of recovery as local businesses show strength and robustness in uncertain times. Both the local services and manufacturing sectors show signs of bounce back across all components of the index, but once again remain below those COVID-19 levels, so remain below the pre-COVID-19 levels. The local manufacturing sector was likely to be riding that wave of artificial increase in business activity in prep for the EU transition, whereas the service sector did struggle a lot in terms of the national lockdown being imposed in Q4. There's certainly challenging times ahead for local businesses as they navigate their way through a number of things in the coming economic landscape in terms of elements of the transition deal and what it means for businesses, business operations, perhaps maybe even lower consumer demand as behaviours adjust from being in lockdown. And then obviously, as the economy opens up as a result of the mass rollout of the vaccine, having an impact on businesses as well. So I suppose despite both local sectors showing signs of recovery and resilience, there still is continued uncertainty going forward. Thank you so much. Yeah, thank you. I'm happy to take any questions at the end. And also there's my email as well. So happy to take any questions by email.
Okay, thank you, Sunny. Yeah, we might have some thoughts and questions as we go on. Again, before I come to Steve from Prime, just to throw out there, I'm aware I've got some really good colleagues on the call today, and I am going to try and ask you to come in. So I'm going to give you a heads up now. So I know, obviously, I've got Tom, our president, manufacturing engineering background, Kim, our custom specialist, David B, who's been running the Brexit group. I've got Roger from Lloyd, Nick Abel. Welcome, Nick. Nick is the chair of the Coventry Warwickshire Local Enterprise Partnership, and Wright Hassel. So welcome, Nick. Frank Mills. I know I've got Frank with us today. Frank is the executive chair of Coventry University Enterprises, so has a really good outlook, not only in terms of the education sector, but actually also in terms of the property sector, because the Innovation Village is all about supporting businesses. So there's lots of great people on the call today, but I'm just giving you some of you a heads up that I'd be interested to hear your thoughts. Okay, before we do that, Steve, can we come to you now? So when we take all that data, what does it tell us about how we've supported businesses and the kinds of support that businesses will need going forward? Over to Steve.
Thank you, Louise, and thank you, Sunny. Yeah, my name's Steve Harcourt. I'm one of the directors at Prime Accountants, based in our Coventry office. As Sunny has just alluded to on his QES report there, it's showing that obviously the economy has taken a massive hit. We're still below where we were pre-COVID levels, and who'd have thought, this time last year that the government were going to be putting £330 billion worth of funding into the UK economy to support businesses. It's just astonishing, really. I, for one, thought that the pandemic or the coronavirus would be gone by the summer. So, it's taken a lot bigger toll than any of us would have predicted. So, yeah, I'm just going to run through the COVID support that's been put in place for businesses that hopefully a lot of you have been able to utilise, or if there's some items there that I mentioned today that you're still unsure about and possibly could apply to your business, you could contact myself or the Chamber just to find out some more information on that. I'm then going to go and look at what support is going to be needed to continue through 2021, because obviously we're not out of the woods yet. What 2021 may look like from a business point of view. I know that's a bit of a finger in the air job, seeing as we're still in a position of lockdown, but we'll have a little look at what potentially pent-up demand is there once the vaccine is rolled out completely and the economy may return somewhere back to normality. So to start with, I'm just going to run through a couple of the things that the government have got out there for us to utilise at the moment from a support point of view. First on the list is the job retention scheme, or the furlough scheme. That has now been extended to the end of April. At the minute, it's 80% of wages, and it's capped at £2,500 per month per person. However, businesses are still having to pay the employer's NI and pension contributions from that. There's a job support scheme out there, but that has been postponed until after the furlough scheme ends. And then there's a job retention bonus that, again, was meant to be paid out in January when furlough scheme originally ended, but as that's been extended, that job retention bonus has been postponed indefinitely because we don't know quite when that'll kick in. We've alluded to CBILS loans from banks and lenders, and bounce back loans, support that's been given to businesses who've applied for them, CBILS for small, medium-sized businesses up to £5 million, and then bounce back loans up to £50,000 for smaller businesses. The application of the bounce back loan was a lot less rigorous, so that was taken up quite well throughout the businesses in the region. I think 68 billion has been given out in loans up to December 2020, and the government have obviously guaranteed 100% of those bounce back loans. On the downside, the loans are repayable at some point, and there's some statistics out there that say that around about 40% of the bounce back loans may not be recovered. So that could be a big hit to the government's coffers at some point in the future. Loans are obviously repayable, grants aren't, so there's been some good grant support out there. Initially, local authority grants, £10,000 worth of grants. There's now been tiered grants and lockdown grants for various industries that have been affected more than others. So you've got your tourism, your leisure, your hospitality industries that can claim additional grants, and they come from the local council but supplied by government. So if you haven't applied, it's worth looking at local council websites to see if you fit all the criteria, if your business is still affected. Some of those are still open, so that's the good news there. Self-employment income support, and we've touched on that, just saying that people who are self-employed completing their own tax returns get 80% of their profit paid to them in 3 monthly chunks, and that's up to, again, a cap of 2,500. Businesses that are VAT registered, there's been the VAT deferral scheme, which has been extended for repayments, which is great news recently, giving businesses more time to pay, and that's something we'll touch on. Maybe we can hopefully see an extension in that through 2021. For individuals, there's been extensions on, deferrals on self-assessment payments. So the July payment didn't have to be made. You could make that, but you would have had to pay that by the 31st of January, but that was some sort of support that government gave to individuals. And then there's business rates, holidays, and cash grants for again, hospitality and retail businesses, which has been very, very useful for businesses who have struggled from a cash point of view through the onset of the pandemic. And there's been other support as well. A lot of things that aren't necessarily always publicised greatly. There's a HMRC time to pay on income tax and corporation tax. There's a postponement of IR35 rules, which should be kicking in April this year, but postponed from previous years. Statutory sick pay rebates. There's been bans on evictions for tenants who are struggling to pay rents, mortgage holidays, and increased universal credit for individuals. So there's been quite a few elements of government support throughout the last 12 months. The key ones really are the job retention scheme, the furlough scheme, which a lot of businesses have had to use, the C-bills and the bounce back loans, the grants for certain industries that have been helpful while businesses have been closed, and a key one is the VAT deferral scheme that has now been extended, as well as repayments are due from the start of 2020. That support obviously has been key to keeping businesses afloat. Again, a study has shown recently that the number of insolvencies has been relatively low. What people are now looking at is 2021, and could the extension of the support help businesses through the first 2 quarters of 2021 for when we get through to the summer and hopefully more full capacity trading. Support that I think we need to look for the government to help with is businesses that have been affected by the industry that they supply. So not necessarily pubs, restaurants, clubs or leisure facilities, but people and companies who supply those businesses who are really falling through some of the cracks and aren't able to get the grants that are, companies can apply for in those sectors. They're also not getting all the business rate relief that they require, and could that be extended to 2021 to help these businesses that are still closed? That's something that we'd be looking to see if the government can assist with going through to 2021. The job retention scheme, so the furlough scheme, that will probably end at April as it stands, but we would like to see a furlough scheme that would hit the business or help the businesses that have been hit hard. So the hospitality and leisure sectors, even sectors like aviation or tourism, people who are going to come back into work because when the demand is there, the businesses will be required. So that furlough scheme may well end up being just sector specific going past April. So we just have to wait and see what happens there. But that would be good if we could get that support in place. Coming back to the VAT, big cash flow issue with companies having to pay VAT this year that has been deferred from 2020. Would there be an extension again by HMRC or a deferment that companies can make for Q1 of 2021? It'd be interesting to see if we get some support on that and give companies more time to pay. Self-employment as well, and directors who are paid small salaries, haven't really had all the support that they've required and have fallen through some of the gaps. So it'd be nice to see some of the businesses out there that have struggled to get funding to help them through the pandemic in 2020 are really going to struggle now. We're coming out of or the back end of it, hopefully, and there is light at the end of the tunnel. So they need more support. It'll be interesting to see what happens in the budget. Budget's due on the 3rd of March. Obviously, we're still going to be in a period of lockdown at that point. We'll probably go into a tiered sort of lockdown system after that. And I can see this budget coming up being more of a supportive budget rather than a tax heavy, reclaiming all the money that we spent type budget. It'd be a bit of a political nightmare if they start raising taxes and changing the policy that the government had set in place of not raising taxes when they came to power. However, I think down the road they will have to do that. They will have to change their policy, unfortunately. So there might be some rethinking of changes in capital gains tax rules, and possibly the IR35 off payroll working legislation may well be delayed again. But we'll have to wait and see what comes from the budget. But I can predict, I think, that it's going to be a very supportive budget for businesses. Rishi's already last week announced that the CBILS and bounce back loans that are due to be repaid over 6 years, that can be extended to 10, and there's sort of time to pay again legislation that he's going to bring through on that, where possibly only paying interest only payments on that for 6 months. So that's going to help businesses through the extended period of lockdown, which is great. So that brings me on to what 2021 may look like from a business perspective. Obviously, certain sectors, again, are going to be very, very hard hit. Hospitality, leisure, still unlikely to be open and at full capacity through 2021. There's going to be some winners. Obviously, retail, city centre, town centre retail is going to be badly hit, or has been badly hit. It's going to be continue to be hit hard. Online retailers, however, are going to have and still have a great 2021, I would have thought. Businesses that are in hospitality, that have got land space for people to go out and eat in gardens, or have parkland and things like that to sit down and eat in open air sort of venues, would probably thrive, whereas more indoor venues will probably really struggle. I do believe there is going to be a pent-up demand for engineering, manufacturing, services, again, retail, online, when people start to come out of hibernation, as it were, and we can actually move around and do all the things that we want to do. So I'm looking for, at the end of 2021-22, being quite optimistic again, somewhere near where we were pre-COVID levels with regards to the results that would come out of the QES at the back end of next year. So businesses have been very resilient, very adaptable. Lots of my clients have changed the way that they work, the way they process things at work. They're a lot of working from home, which again has its advantages from a cost-cutting point of view. There's always going to be winners, there's always going to be losers. There's going to be some businesses that won't survive 2021, unfortunately, but a lot of new businesses coming through because they've seen where things have changed in the economy, where there's openings in the markets, and where small limited companies or small businesses can actually thrive, and people can make a living. Changes in people's outlooks, I think, is mainly where that's coming from. So I'd just like to cut back to where we were with Sunny before. The QES results, optimistic, but still let's be cautious, because when they were done in Q4, we weren't heading into a lockdown at that point, or a lot of businesses didn't think we were. So again, important to do the QES for Q1, Q2 for 2021, just so that we can get that data in, get that those results fed back to local government and national government as well, which is what it's all about. So that's all I've got to say for now, really. So just wrapping up there, Louise, and I'll pass back to you for questions or debate. Okay. Thank you. Yeah.
Thank you so much, Steve. Thank you, Sunny. Getting a fair few comments coming through the chat box now. So hopefully you're keeping your eye on chat and having a read. I do intend to come back to some of those points. One in particular from, let me look, Simon Cossey. Yes, the end of furlough is a worry, Simon, at the end of April. You will know that Chambers of Commerce, alongside other business representative organisations, we're desperately lobbying the government to extend the job retention scheme. They may have to think about that being sector specific. I can see some of the comments in the box, in the chat box, are around sector specific support, but we are asking them to extend furlough. And yes, I do think there'll be a spike in redundancies at the end of furlough. I think what we need to remember is that the job retention scheme was not just, it wasn't just a support mechanism for businesses and for jobs, which of course it is, it's really important, but it was also a way of tapering the volumes of individuals, very sad as it is, the volumes of individuals that go and hit universal credit. So I think there's a possibility that the government will extend that. It may be sector specific. Okay, I want to bring in some people now, some of our guests on the call. If I can ask you to come in and give us some thoughts and comments as quickly as you can, because I've got loads of people I would really, really love to get through if we have time, and I'm conscious of time. So Tom Mongan, manufacturing engineering, from what you've heard there, that we've seen improved confidence, improved optimism towards the end of last year for manufacturing engineering. Does that sit well with you in terms of your outlook, Tom?
Yeah, good morning, Louise. Good morning, everybody. My name's Tom Mongan, as Louise says, president of the Chamber. I've been involved in manufacturing for nigh on 50 years, so and I'm currently helping a number of companies with processes, new technology, because my last 27 years was involved in the laser industry. But there's a mixed bag coming out of manufacturing and engineering. Some people, some of the companies I'm talking to are extremely busy and are taking on staff, where others are just treading water, still have a number of staff on furlough. And if I'm honest, I fear for those people that are still on furlough. But there was, I think, the upturn that Sonny was pointing out. There was a lot of stockpiling going on around December and January. There's a lot of issues with documentation. I'm talking to a lot of companies and receiving a lot of calls, which I refer to Hazel and everybody else within the chamber, bless her. Yeah, so there's substantial supply chain disruption, and that's a worry. And then again, I don't know whether, such a delay in trying to get on top of it. And I know the government said and spent a huge amount saying be prepared, but nobody knew what to be prepared for. And, that was a major problem. There's also, which isn't commonly known, is material shortages and the cost of the raw material. That is causing huge problems, and it's going to have an impact going forward for sure. And I think the thing I picked up from the PMI as well, which I contribute to, was for the 11 months in a row, there's been a reduction in employment, which is a very worrying trend. So that's sort of the major points. And again, I could talk for a lot longer.
That's
about
fine, Tom. Okay,
that's the major points, really.
Okay, that's really helpful. I'm going to move all over the place here. So we know that across manufacturing and engineering, there was a huge uptake of our bounce back loans, our business interruption loans. And you're right, Steve, there have been some recent announcements about the repayment terms of those loans. So tapering the repayment to help businesses cash flow and repay easier over a longer term. Roger, can I come to you and ask you to give us a perspective? A couple of questions on the chat box are directed towards our banking sector in terms of supporting businesses, supporting overdraft facilities and payment terms. Roger, if you can give us some quick input, please.
Yeah, hi, Louise. So what I'm seeing in terms of demand for bounce back and CBILS is it's probably run about 25% of my current lending at the moment. So I'm typically lending 10 million a month. Done that in January. February looks equally as strong, but we're seeing a shift back to traditional lending, particularly people buying off premises. I might say not in Coventry and Warwickshire, and we do need to look at industrial land and commercial land availability. They're buying outside a region. Change to the bounce back and Sybil scheme, so it's still available until the end of March. Bounce back loans, there is a formal agreement in terms of extending payments. That was announced yesterday. With Sybil's, it's slightly different. Steve mentioned that it was covered. We haven't got clarity yet on the Sybil extension agreement, so that's really a bespoke discussion with your bank. But bounce back, there is a formal policy around 3 6-month extensions where you would take basically a capital repayment holiday. But we're not seeing as much demand now. So if there are businesses, out there on the call that haven't looked at the availability of funding, it is really competitive. The only challenge you've got is the repayments term is really short, 6 years. It's really unusual to be repaying stuff over 6 years. So just check out the implication of the repayments on the cash flow, because I think that's what we'll start to see now. With a bounce back loan, you've got an £800 repayment 12 months on. And, for a lot of the smaller businesses, that's a big ask to be able to make those payments in current economy.
Thank you, Roger. That was really helpful. Frank, can I come to you next? So I want to take a perspective, not only from our education sector, Frank, but also how you're seeing things on the ground in terms of your property lets, in terms of the investments across the whole of the Innovation Village, on which, of course, your Chamber of Commerce sits. Over to you, Frank.
Yeah, sorry. Good morning, everybody. I actually feel, Louise, we're in a bit of a bubble, really, because businesses seem to have held up quite well for us on both the Tech Park and the Innovation Village. Yes, some of the buildings are closed because it's mixed ownership, of course, there. We own about 5 of the buildings. We have taken, in all honesty, we've closed 2 of the buildings, but we're actually taking the opportunity to renovate them. And then they're going to be used for research, which they can move in as quickly as possible, because, as you know, research is considered one of the key things within education, so we don't have to. The Tech Park itself, we've not closed at all, because a number of our tenants can't work from home because they're all in the digital market and use very, very high bandwidth that they can't get from their homes. So the Tech Park's been open all the time. We're getting about a third of our normal tenants in people, somewhere 50, 80 a day, which does put a bit of a strain on me, because I've got to provide services like a bistro, even running minimal services, but there's still a cost involved. We did, through particularly lockdown 1, halved our service charge to try and help the small businesses. And we also offered a rent deferral. That rent deferral is started to be paid back now, and we're quite shocked that it's coming in. We did almost anticipate some requests for further deferral or even cancellation, but they seem to be paying us as the initial agreement. Still getting new tenants. I've had 3 new tenants since December. One of them particularly is having a bit of difficulty getting people to move his furniture in, which we're trying to help him with. But against that background, I think we're doing okay. Wow. Obviously, the conference centre is shut, and we've got a problem there. We can't use that, although we can use it for internal meetings. So the university do use it for some high-level meetings off the board, but I think the rules are very clear. You can only use it within the group of the company that owns the conference centre.
So quite a mixed bag there, Frank, really. Some real optimism there in terms of investments, new tenants coming in, but also some tenants who have needed a bit of support, and you've been able to provide that support. So a bit of a mixed bag there, yeah?
Yeah. Well, the ethics of it, because ever since I've been there, mainly because of the university, we always try and help tenants. We're not one that throw them out just because they don't pay the rent on day one. So we've always had that culture of trying to help them through a problem rather than just say it's your problem. So it is a mixed bag. I also run the Inkwell, which is an art shop and high quality printing. Well, of course, with the restrictions at the moment, I can only serve students. So we are an added value students, but it's an expensive thing to run when you've got no other business.
Yes, yeah. Okay, thank you, Frank.
The
Nick,
other
I'm going.
thing is that I am involved on the periphery because I've got this company in Singapore, and in spite of they've been through 3 lockdowns, because our customers are basically government, we're still getting some quite good cash flow coming back from work we're doing for the police and fire service, and that comes back to us. Yeah.
Okay, thank you, Frank. That's really helpful. I'm going to stick with because we're getting some quite a few comments. I'm going to stick with the employment land issue just for a moment, I promise, not for long, and also ask our friend and colleague Nick Abel, the chair of the Coventry Warwickshire Local Enterprise Partnership, to give us a little bit of input as to where the LEP sees things going, what they're aiming and helping to do in terms of recharging our economy. So I'm going to come to you, Nick, and then I am going to come back to a couple of the other questions, don't worry, that I've seen in the chat. So Steve, one for you is around self-employed company director support. That's being brought up by Phil in the chat, which I would like to come back to. And also, interesting point, Brett, yes, I agree. The concept that we should now be supporting viable businesses going forward and not necessarily continuing to throw government money, taxpayers' money at every business. That can feel quite contentious, but certainly, even if it's only on the chat, I'd be really interested to hear views on that. So, Nick, can I come to you? How's the LEP helping in terms of trying to reset our economy going forwards?
Thanks, Louise, and morning, everybody. And yet, I won't be a politician, and I will answer the question. So there's so much else to talk about. So the LEP specifically have come up with a reset strategy that's being delivered through our business groups. That reset strategy is kind of predicated on the fact that what we come out into post-pandemic will be a very different business world to the one that we went into it with. There's a lot of information on that and on our website if anybody wants to have a look, but I'm sure you all know how to get into the various business groups that form part of the LEP infrastructure. In fact, there are a number of people on this call who actually sit in those business groups, and Louise, I know you do. So we're doing that, and we're trying to influence, and we're trying to come up with policies that will directly help businesses thrive. I think underpinning that strategy more than anything else is skills. There is absolutely no doubt that a lot of our workers will not have the right skills post-pandemic. There's a massive effect on the way people are working. Some are finding it easy, some are finding it difficult. But those that are finding it difficult, I'm afraid, are going to have to go back to college. And so we're looking at a number of ways of, in fact, government's responding to this, in fairness. We're looking for a number of ways of actually delivering that. The second thing that I would emphasise about the LEP's doing, of course, the Growth Hub is part of the LEP. The Growth Hub, along with the Chamber and the FSB, are delivering fantastic support for businesses who are struggling at all levels, from queries about VAT in respect of Brexit to employment issues, to searching for land and all those sorts of things. So that part of Coventry and Warwickshire is functioning really, really well. The advice that's coming through is good, and I think our Growth Hub is held up as an exemplar to others, certainly in the West Midlands region and actually around the country, of how to support your businesses on their patch. So that, I think, in a nutshell, Louise, is what the LEP is currently doing. I've got lots of other things I want to talk about because I've been fascinated about this chat. And can I just say that this reminds me of when we went into what we now know as the Great Recession, and everybody was running coffee mornings entitled Weathering the Storm. And we all used to meet each other and talk to each other in person. But my God, does Weathering the Storm look easy compared to this one?
Yeah, absolutely. What about the employment land issue, Nick? I mean, this is something that that certainly the Chamber, led by our previous past president, David Penn, it's something that we've lobbied on really, really quite heavily in terms of bringing investment opportunities to Cov Warwickshire. We need the kind of employment land that can make that happen.
Well, yeah. Now this is a really difficult problem, and I think we need to know a bit of history about this. But actually, in fairness, I can remember David Penn lobbying for more houses in Coventry, so he can't claim for for being blinkered on employment land. But we have always lacked employment land. But it's one of the problems of being a really successful region, of course. That is, you have to take that as part of the penalty for having been the sort of place people want to relocate to. But if you go right the way back to the beginning of the LEP, when we came up with a strategic economic plan, that fed into what became the industrial strategy that Greg Clark introduced in the government. And I can remember sitting with Greg Clark and other government officials, and they insisted that our region increase the number of houses that it was committing to build, because government then saw numbers of houses as the key to votes. And they were wanting to push and push and push our local authorities to deliver more houses. And if you go back, 10 years, with huge issues about where the houses were going to be built. And our districts and boroughs picked up a lot of the slack from Coventry, because Coventry couldn't fulfill what it wanted to build in terms of houses. So what we now have is a right mishmash where we're building houses on Greenbelt and we haven't got enough employment land. And frankly, you've seen it in the chat, we're either going to become commuter belt, or, Andy, I've got a bone to pick with you, retirement, something that I'm moving into. So I just...
Okay.
I want to keep living here, but we have a massive issue. We do not have enough employment land, so we've got to be really cute about how we work this one out.
Okay, thank you, Nick. That was really helpful, and clearly we will continue to lobby on the whole issue of needing more employment land. We haven't just faced up to a pandemic, we have also come to the end of the EU transition. So stick with me, guys, because I'm conscious of time, because I am going to come to Kim and David very quickly, David Burton, for a little bit of input around that very quickly. But before I do, Steve, have we got an answer to Phil's question? So Phil's question, I'm not sure we have actually, but Phil's question, Phil Ingle, your question, Phil, was around self-employed, wasn't it? Company director support. Phil?
So we've highlighted the issue, which has gone on for a long while, that self-employed company directors have basically fallen through the cracks of support. I am also chair of Coventry Warwickshire CIPD, and I know a lot of self-employed practitioners there have been getting by on bounce back loans since then. And also we must be conscious about what's going on in the arts sector, particularly in the south of the region around Stratford, because there's lots of people involved in the arts there. Both of these affected. Unless Rishi comes up with something on the 3rd of March, at some point, there's going to be some impact from those self-employed directors in terms of bounce back loans. Yeah,
good point. Steve, is that something we continue to talk about, continue to lobby for?
Yeah, it is. It's it's people that have started up in business as well in the last 12 months. That by no fault of their own, they've been affected by the timing of the pandemic and when things have started. But it's obviously something we want to lobby for. A lot of these people that have fallen through the cracks by no fault of their own, it's just the way that their remuneration set up within their business. That can be slightly changed, but if you've got your business isn't locked down and it's not working, no income coming in, you haven't got the support there from the government to pay you the amounts that you would have been salaried in the past, which is unfortunate. But continue to hopefully see something come through on that in the budget. Like Phil said, we're sort of fingers crossed for guys that are new business startups and company directors on dividend remuneration.
Okay, Steve, thank you. And Sonny, we must pick up Nick's point, certainly going forward as we analyse QES, as to whether we start to see the outliers. So instead of seeing the averages, we now start to see the outliers on our indexes in terms of either significantly being hit, or now starting to look far more optimistic, far more better in terms of forward orders, forward exports, etc. So that was a really good point, and I haven't forgotten it, Nick. So stick with me, guys. I am conscious of time, but I did want to touch on the other big issue that has faced us, which is, of course, coming out of the EU. Kim, customs expert for Cov Warwickshire, working out the chamber. What kinds of advice have you been giving to businesses around the end of the EU transition?
Hi, thank you for introducing me, Louise. Really popular topics at the minute, claiming preferential rates. The majority of the customers that are contacting me at the minute are still confused, not really sure which way to turn with this. It can be quite complicated. Those that are already involved in international trade do have some experience with it. So essentially, the trade deal doesn't mean that we can trade freely with the EU still. Goods still have to meet preferential rules of origin. It can be quite complicated to get your head around. The Chamber does offer some fantastic courses on it. I can say myself, I've used them before I actually joined the Chamber last year. They're fantastic. We've recently launched a new brokerage service to help companies. I think that service really stands out because we're not only offering the brokerage service, but an advisory service to support all you businesses.
Okay.
Thank you, Louise.
Okay, no, thank you, Kim. And David Burton, do you think these are teething problems, David, or do you think we've got a longer term worry in terms of the way we have transitioned out of the EU?
I think probably the latter, Louise. There are undoubtedly some teething problems, but those of cost and time spent on form filling look as if they are going right on into the future. One thing I would add to what you've said and what Tom said is that my largest automotive client is now coming under pressure from the German manufacturers to actually transfer work to their EU facilities, which of course means that we will have to transfer it from our UK facility. So I don't know whether, Tom, that is a trend that you're seeing, but it's there is quite a lot of pressure now from the likes of VW and BMW to get all of their components back into Europe.
Yeah, that's been reflected through the supply chain, David. That's a big worry.
Okay, thank you, guys. Right, I am now very conscious of time, so I'm going to try and wrap up and summarise. Thank you so much for all of the comments that have been coming through the chat box. I think I've picked up on most of them, and if not, don't worry, I've certainly been sitting here scribbling notes to take forward on your behalf. I think I'd like to summarise by feeling a little bit more upbeat about the confidence and the optimism going forward. And yes, I get that that is aligned and allied with the vaccination programme, but I also sense that it is a real feel of bounce back, a real feel that things will come good, and that we will bring things back into a much stronger, brighter future. Albeit, I do accept your point, Nick, around skills and particularly relating skills to young people. And I think that could be a much longer term challenge that we all have in terms of supporting our young people and supporting those people into skills and into jobs. It was interesting to hear that advanced orders and forward orders are at lower than capacity, because again, I am an optimist, and that tells me that we have got capacity that we will move into, that we will build into as we move into the future. I love the comment on the chat box around supporting what I call viable businesses, not always, and forgive me for this phrase, zombie businesses, but I love the concept of supporting viable businesses, and I think there's a real opportunity to do that, guys, both through our banking sector, which would obviously do that, but also through the work of our local authorities who are still sitting on flexible funds, grants that they do want to get out there to support our local businesses across Coventry and Warwickshire, working with the LEP, working with the Growth Hub, working with the Chamber. And what we're trying to do is think about how we not only use those funds for an immediate crisis response, but as our colleagues on the chat box have said, look at using those monies to back the winners, so to support viable businesses and viable jobs going forward. So I love that point. The kinds of messages I've got from this morning in terms of our influencing and the kinds of support that's still needed out there is around grants, flexible grants. I think those are there. It's just for us to communicate more to you that they are there and you need to access them if you're eligible. Furlough extension, we're definitely still lobbying on. I think there's some possibilities there. It may be sector-led, but I think there are possibilities there. We had a comment about aviation. That might have come from you, Steve. Just to say, only last week the government finally launched an aviation support package, which is worth up to £8 million per airport, who have obviously been hit by COVID-19. So we're starting to see those kind of support packages flow. Definitely take the self-employment issue, Phil, and that is something that it continues to be a gap and something that the government need to think about. Love the issues around VAT deferment, Steve. Again, that's something we need to continue to lobby for and possibly might see come through the budget. I'm not sure, but possibly. Business rates, we don't talk enough about business rates sometimes in terms of business rates relief, and that is something that we do talk to national government about in terms of trying to give more business rate relief to more of our businesses, particularly those within hospitality, tourism and sector. So lots of work for us to do, and as I should always do, flag up the windows of opportunity for our businesses really across Coventry and Warwickshire, which are of course City of Culture 2021-2022. Now we're still going ahead with City of Culture beginning May 2021. It is going to look and feel very different when I talk to the City of Culture Trust, the team there who are working so hard to try and make this happen for us. It is going to look and feel different, but I still think it's going to be a fabulous showcase of Coventry, Warwickshire, and indeed the wider region. And now we're starting to also hear a little bit more intel and a little bit more information about Commonwealth 2022. Be interesting to see whether that goes ahead. But we are starting to see far more information come out from the Commonwealth, the 2022 team. And if you're interested in that information, make sure that you are, logging on to our regular newsletters and updates on our website, or indeed go and have a look at the 2022 website itself. Ladies and gentlemen, thank you so much for your time this morning. It's been lovely to see so many of you. The input has been fabulous. Don't let it stop here. You know where I am. You know how you can get in touch with me or any of the team at the Chamber, Hazel, Kim, Chris, Sean. Please let us know your thoughts. Please let us know what we can do more so for you. And I look forward to seeing you soon. And a very final ask from Sean. Thank you for hosting today, Sean. Our head of policy is please complete in our QES for us. You can see how important quarterly economic survey is to us because it does inform us. We do use it to influence and lobby. So it only takes 5 or 10 minutes. Quarter one, I think, is out there already. So please, just take 5 minutes to fill in your quarterly economic survey for us. Ladies and gentlemen, thank you so much for your time this morning. Have a great day and you all stay safe. Take care. Thank you, guys. Thank you.